Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the 4-hour chart with the bullish scenario where we are looking for an impulsive structure to the upside. The most common target area for a wave 4 is between the 0.236 and the 0.5 Fibonacci, taken from the low of 2 to the high of 3, giving you a target area between 50.3k and 47.3k. The invalidation for a wave 4 is the 0.618 sitting at 46k, and the rare target for a wave 4 is the 0.146 sitting at 51.3k. As you can see, the current low over here is made between the 0.146 and the 0.236, which is the rare target area. However, time-wise for this wave 4, it can work because this low is made after the 1-to-1. The vertical lines that you see in the chart are fib times taken from the high to the low of this wave 2 put on top of the high of 3, comparing wave 2 in time with wave 4 in time. Most common is that wave 4 is longer in time than wave 2, which is the case because this low is made after the 1-to-1 fib time. What we don't really like to see is this wave 4 continuing to range until the 5 fib time over here, which then lowers the probabilities for this to be a wave 4. The 5 fib time is sitting on Friday, the 23rd of February at 1 a.m. in the morning, Central European time. If we look for support areas in this bigger wave 4 target area, then first of all, we had the 2-hour gap top, which acted as support, as you can see over here. If price comes back down over here, the probabilities increase for price to fill this gap over here and then move to the blue support area, the box that I have on my chart between the 236 and the 382, which is sitting between 49.1k and 49.8k. Below this, we still have one more level, which is the daily naked point of control at 47.325, which is in confluence with the 0.5 Fibonacci at 47.3k. However, a wave 4 of a higher degree, being the green wave 4 here, does like to retrace to the price action of a lower degree wave 4, which is the blue wave 4 over here. And as you can see, the blue wave 4, the price action of the blue wave 4 is pretty much ending at the 382. So going to the 0.5 would not be preferred in this scenario. If we then look at the local price action, then one of the scenarios that could still lead to lower prices in this wave 4 is an expanding flat. Here we are looking for a 3-wave move to the downside that is finished in a wave A, preferably a zigzag to the upside in wave B, which is the most common pattern of 535, and then we're looking for a 5-wave impulsive structure to the downside in wave C, ending somewhere in the common target area for the green wave 4. The most common target area for wave B is between the 1.236 and the 1.38, taken from the high to the low of A, giving you a target area between 53.8k and 53.4k. As mentioned, inside this wave B, preferably we're looking for a zigzag structure. Wave A here being a contracting diagonal, then we're looking for B potentially already in, and then a wave C to the upside. Currently, the most common target area for your wave C, being between the 1 and the 1.236, is in nice confluence with this wave B target area. The trend-based sub-extension for this wave C is taken from the low to the high of A to the current low that we have over here. The most common target area for this wave B is between the 382 and the 886, which is of course quite a big area, but as you can see, inside this area we had one additional support box, which is the white box over here, sitting between 51.6k and 51.8k. Just below this box we also have the range, value area high, and of course the golden pocket, which is always an important level, after which we want to see an impulse to the upside to finish wave C, therefore finish wave B and look for an impulse to the downside. If we look at the most bullish scenario, then wave 4 is already finished. In this scenario, wave 4 ended between the 0.146 and the 0.236. As mentioned, this area over here is a rare area for a wave 4. Here we are looking for a 5-wave impulsive structure to the upside in a wave 1, which then is a diagonal structure, 1, 2, 3, 4, 5. Wave 2 common target area is between the 0.5 and the 0.786, which gives you a target between 51.6k and 51k. The 0.382 is a less common target for a wave 2, sitting at 51.8k, and a rare target for a wave 2 is the 886 at 50.8k, with the invalidation for this scenario being price taking this low. After wave 2, we want to see an impulsive structure to the upside where price also takes the highs, but instead of turning around for then a wave C to the downside in the flat scenario, we want to look for continuation to the upside and volume coming in. In a sideways double combo scenario, we're looking for a 3-wave structure in W that is finished, X finished here, and then we're looking for a wave Y. Because wave X retraced to the 0.786 Fibonacci taken from the high to the low of W, a double zigzag here to the downside in a zigzag ABC in W, correction ABC to the downside in a wave Y, has a very low probability. The higher probability scenarios for a wave Y is either a flat structure or a triangle, but in both cases probabilities are higher. You're going to take the highs first before considering to take the low. In a flat structure, you expect at least the highs of this range to be taken before downside, and if we look at the local structures to the downside here, then probabilities are not high that in a triangle a wave A, for then a B, C, D, E and continuation up, is going to take this low of wave W. If we then look at the bearish scenario on the 4-hour chart, we're looking for a zigzag to the upside in an ABC. Price is currently ranging above the 1.618. This does increase the probabilities for an impulsive scenario compared to the bearish ABC scenario. In this scenario, you want to see bearish structures to the downside. Now, if we then zoom in, there's only 3 bearish structures that you have to keep in mind: an impulse, a diagonal, and a double 1-2. For a impulse, we want to see a wave 1, 2, 3, 4, and 5. No overlap between 1 and 4, but as you can see in this range, there is lots of overlap, lowering the probabilities for an impulse. If we look at a diagonal, then we're looking for a wave 1, 2, and then we still need a 3, 4, and a wave 5. And preferably, I only start looking for diagonals when a wave 4 is in, which clearly is not the case over here. And then finally, we're looking for a double 1-2, where we have a wave 1, 2, 1, 2, and then eventually we look for continuation to the downside. However, the second wave 2 over here hit the 886 taken from the high to the low, which is a rare target for a wave 2. Now, if price does move towards the downside, however, we have to keep in mind potential continuation. In other words, if the low here is taken before the high, probabilities do increase for potential continuation to the downside. And it does remind me of a scenario that we encountered a while ago, which is over here in April 2023, where we also had a structure to the downside, a sideways range, another sharp structure, looks very 3-wavy as well. Then the retracement went to the 886 taken from the high to the low here before continuation to the downside. As just explained, probabilities at the moment are higher for a wave 4, and in this range, probabilities at the moment are higher for either a flat structure to the upside here and then an ABC looking for a wave C to the upside right in this particular flat, an impulse in a wave 1, 2, and then a wave 3, or a WXY where it's unlikely for Y to take this low before taking the high. So if price does take this low first before taking the highs, we really have to pay close attention at support. So we want to see proof of support, meaning market structure changes, bullish local CVD divergences, RSI, MACD, money flow indicator stuff, candlestick patterns, it doesn't matter, but we definitely want to see some proof of support if price moves down first before taking the high. If we look at the CVD divergences, then at the moment we do have bullish CVD divergences here, higher low in price, lower low on the CVD, target is this high, and also more locally with the drop to the downside over here, we have bullish CVD divergences, higher low in price, lower low on the CVD. On the 15-minute AGGR chart, it looks like this. Here you can see higher low in price, lower low on the CVD on blue over here, between the CVD on blue, this low, and the low that we made here, and also on yellow you can see higher low in price, lower low on the CVD, but I don't really like to use yellow per se here because price moved up and yellow just continued to the downside. So I do prefer to keep an eye on the blue CVD, which shows bullish CVD divergences with this pivot, higher low in price, lower low on the CVD. If we then look at the probabilities of the different scenarios, then on the 4-hour time frame, the probabilities at the moment are higher for an impulsive structure to the upside, where we're looking for a wave 4 and then continuation to the upside in a wave 5. In other words, probabilities are higher for price to take this high at a given moment. In this scenario, preferably we see a wave 4 dropping into the common target area for a wave 4. However, probabilities would suggest that we first take the high before then moving to the downside in this wave 4. If price takes the high very soon and moves to the upside, we have to keep an eye for potential flat in an A, B, C as explained, or potential continuation. If price is going to continue ranging here for a while, then we have to think about a W, X and a wave Y, and if we then move to the upside at a later stage, it increases the probabilities for continuation for this wave 5. Now, as mentioned, probabilities are higher for price to take the highs over here before taking the low. Even for a triangle in a WX and then a triangle in a wave Y, taking this low would be quite far-fetched. However, if price takes this low first before taking any of the highs that we have over here, we have to be aware of potential continuation, and we want to see good proof of support at the areas I mentioned earlier in the video. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.